this update, we look back at what has been for 2022 from an investment perspective, and then look forward to what 2023 may bring. At the start of 2022, most asset classes, shares, fixed income, commodities, etc., were sitting at high valuations. Then we saw issues around war in Ukraine, inflation, high interest rates. All of these things have had a significant impact on markets this year, to the point where now we are doing much less in value terms than we were 12 months ago. Now we look and see, well, what is occurring and likely to be for 2023. We fully expect that economies will slow. Economic growth has been a thing of the recent past, but may be curtailed as we look forward from here. But that's part of the plan, part of the intention. With interest rates being as high as they are, it is the plan that markets and economies will slow. On the one hand, that's important for us to contain inflation, but from an investment perspective, is not what investors want to see. So how do we respond to that? What are activities that we can do to still maintain portfolio values and even profit in markets like these? For most of the portfolios we managed, in discussing with our clients, we over-allocated to cash during the course of this past 12 months. So most portfolios will be holding more in cash than they have historically. That's an intended position to preserve and protect capital. As we now look forward, cash is still not the great ideal that we want it to be, even though earnings from interest rates are higher. We're looking now to see, well, what role can gold play in portfolios? We know that historically over the last 50 years, gold has achieved 11% per annum growth. More importantly, during periods of high inflation, in other words, where inflation has been greater than 5% per annum, the return from gold has been greater than 20%. So we see a circumstance where perhaps the environment for gold to succeed and indeed attract a lot of activity and interest is emerging. Another anecdote towards gold is the fact that central banks, reserve banks, have purchased more gold in this last quarter than they have in any quarter since 1967. Are they thinking forward? Are they seeing something that many investors aren't? And that is that gold may well be the hedge it has been for centuries? Perhaps so. As we look forward, there are three ways that you and any other investor can participate in gold. One is, of course, buying bullion, gold ingots, direct gold holdings. Of course, then issues arise around how to store it. Secondarily is through instruments listed on a stock exchange, such as an ETF, exchange traded fund. A further opportunity is with gold miners, buying the stocks, the companies that actually mine the gold and distribute it. These are available directly or through an exchange traded fund. So be assured that as we look forward to 2023, we are considering not only how to protect portfolios, but also add value through a specific commodity like gold. Thank you for your time and have a pleasant festive season.